Next, we have Eric Rubenstein, who's founder and founding managing partner of New Climate Ventures, an early stage venture capital firm investing in innovative carbon reduction and avoidance technology companies. Eric.
Yeah, thanks, Tim. And that was a powerful call to action there, Thomas. So thank you for that. And I'm glad that I'm following Tyler here also, because a lot of the things that I'm doing tie in pretty well with what he's doing as well. And we're going to have a conversation after this, Tyler. So yeah, we're investing in, so Eric Rubenstein, New Climate Ventures, focused on carbon reduction, technology investment in early stages, so pre-seed through Series A. What I'd really like to start with is speaking to, kind of backing up a step, speaking to the theme and why now? Why are we investing in these spaces? So when you look at the world today, and when you look at the world, say 10, 15 years ago, technologies developed 10, 15 years ago, these renewable power, when you're looking at wind and solar, is really enabling technology to be greener today and to be economic, we think, in the next number of years for advanced technologies. And that's a pretty exciting thing. And that kind of dovetails really well with the consumer interest, where you have millennials, Gen Z, et cetera, and all of us sitting here and beyond that have become very interested in doing better for the planet. We're seeing the effects of climate change daily now. I live in Houston, Texas. We've had epic floods, we've had hurricanes, we've had freezes, we've had all these things just in the last few years, which point to the concern around climate being very relevant. Not everywhere is feeling the same effects as kind of directly as we are here, but if you believe that climate change is real, which most people do now, then all of a sudden you're looking at these changes and you're saying, wow, we need to stop this, these fires in California, et cetera. So the consumer interest is there, and you really see it in the sales of materials. Let's say someone makes a cell phone case that's biodegradable, it sells out. Someone makes alcohol, vodka from carbon dioxide, it sells out, and you can't produce enough of it. So we're really seeing the effects of the consumer interest, and the scaling needs to be there in order to meet those. The consumer is interested. That's parlayed into corporate interests, where corporations, you can see it very clearly, have been making an increasing number of commitments over the last just few years toward carbon-related reduction goals. This all came years after, at this point, the Paris Accords, really. So you really started seeing this trend take off in the 2019, accelerate during COVID in 2020, accelerate further in 2021. So this is a relatively new thing, where the corporations are really starting to announce substantial goals and transition. And then you see that circling back, where you have, say, BlackRock, who is investing in companies, requiring their companies to have sustainability goals, requiring them to have reporting requirements. And that starts to really create this circular loop of consumer interest, corporate interest, and corporate interest driving corporate interest. It's a very powerful effect. So when I get asked if this is a government-led initiative, it's not. I mean, you had subsidies, say, 10 years ago, for renewables that drove that development. That is not what's driving development right now. That's going to be a tailwind. So even under the Trump administration, you saw this trend happening, and you're seeing it continue to accelerate now. So all of this is very powerful to me. And where you see a lot of the hype on television is around electric vehicles, really. That's where most of us feel it in our daily lives the most. When you look at the carbon emissions associated with passenger vehicles, it's only 7% of global emissions, which is a pretty surprising number when you start thinking about all the other sectors that need to decarbonize. So we're really in a position where we need to decarbonize the entire world across supply chains, across sectors. Just to pick one, the fashion sector. So the fashion industry represents 10% of global emissions. Just the protein sector of the ag sector is about 14% of global emissions. So roughly double what you're seeing in the passenger vehicle sector. So as you start kind of going further and further out, the cement production sector is 7-8%, steel is 7-8%. So there's a lot of other areas other than passenger vehicles that need to decarbonize, and they're arguably going to be as hard or harder to decarbonize than the passenger vehicle sector. So it's a very promising area as you start looking at the future of this decarbonization, and you start looking broadly across sectors, that there's a lot to decarbonize. There's a lot of work to do, and we need to put a lot of effort in. And then you look at the success of Tesla, and Tesla alone really driving the change in our entire attitude toward electric vehicles. And you start to think about the food sector and Beyond Meat and Impossible really driving forward the interest in alternative proteins. All it takes is one or two real breakthroughs to start to change an entire sector and a focus on a sector. So what we're investing in is across sectors. We want to take a holistic approach to decarbonization to really represent the change that we need in the world. We're looking at climate tech, so carbon capture, storage, utilization. You can think there, turning CO2 into usable materials, whether that's CO2 turning into jet fuel and diesel fuel, or cement, or rocket fuel, or hand sanitizer. All of these are things that we've invested in already. You look at the alternative materials space and the recycling space. Both spaces we're focused on. We've invested in a company that's making plant-based leather out of regenerative materials, in a chemical recycling company. So a company that actually takes plastics initially, breaks them down into its individual monomers, and then can build it back into its polymers to make a renewable of new plastic out of old plastic. Plastic can only be recycled really 3 to 6 times before it becomes molecularly unstable, and this is a way to make it stable indefinitely. The food and ag tech sectors, so call it next generation of the beyond and impossible kind of strategies of alternative proteins. The last sector we're really focused on is traditional technology, so long as it's emissions touching. So emissions accounting, reporting, marketplaces, measurement companies. So think 24-hour surveillance of methane emissions. Methane coming out of COP26 was a huge focus. We're going to need to reduce the emissions associated with all the activities that we're doing. And it's not just a carbon capture, like going to a smokestack and capturing the carbon. It's closing a valve that someone left open accidentally, where you don't know and you don't have monitoring on how to identify that happened. And maybe you're doing a flyover once a week or once every other week by whether it's plane or drone or satellite. Knowing that valve is open on a real-time basis through monitoring technology could reduce emissions in sectors that are industrial dramatically. So all of these things are things that we're focused on and excited about. I guess what I'd like to close with is we have an opportunity here to decarbonize the world in many different ways, and the technologies really are advanced enough now to become economic with scale in just a few years. So while we can look at things that are 20, 30, 40, 50 years out, that would take a long time to develop, and people should be, and we should be, all of us should be focused on that and investing in that as well. We also have the opportunity to avoid or reduce emissions or capture emissions today and really change the trajectory of the next 10 years. And that's something that I hope that people focus on and think about. And start paying attention to, because I don't think there's enough attention on what the change that we can affect today versus the change that takes time to affect. We should be doing both.
Thank you, Eric. And if you have a question for Eric, please enter it into the chat or the Q&A. What is the most interesting? You mentioned a lot of interesting, really cool technologies. What would you describe as the most interesting, climate technology you've seen thus far?
Oh yeah, it's always a hard question. I really think that the carbon utilization is fascinating, and the fact that we can capture carbon off of, say, the tailpipe of a semi truck, for instance, and then take that carbon and turn it into diesel fuel to go back into that truck. I think that's really interesting. It's going to take a few more years to make that fully economic, but I think that things like that can create this circularity are fascinating, because it can be go into effect in just a few years rather than taking a significant amount of time to get there. And the technology behind technologies like that, which I won't get into, are fairly creative as well.
So what are your thoughts on direct air capture, and in terms of its economics and in terms of its long-term use in carbon to value type of initiatives?
Yeah, so for anyone who doesn't know, direct air capture, you can think about a giant fan that's sucking in the carbon dioxide just in the open space outside, and then mineralizing or turning it into a liquid form, and then you can use it in some form or fashion. And one use case is just storing it in the ground. Others are more varied. I mean, I think it's going to take time for direct air capture to become properly economic. The things that are more desirable today are point capture. So actually capturing off of, say, an ethanol plant where it's a very concentrated carbon dioxide that's coming off that plant. Those are easier technologies to deploy right now and can be economic more quickly. Direct air capture is just going to take some time.
What are some of the obstacles to, like, capturing the CO2 off of smokestacks or ethanol plants, and utilizing the CO2, purifying and utilizing the CO2 for,
Yeah, I guess, I mean, part of it is the technologies. Part of it, I'd say more so than that, is the adoption rate, convincing companies that they should be doing that. Somehow, sharing the economics if you need to, but mostly there isn't regulation around it that you need to be doing it. So without any regulation, it's purely voluntary. And that's something that companies are moving toward, is voluntarily moving in these directions, with the expectation that in the future there could be regulation. Some areas of the world there certainly is regulation, and you need to be doing it, taxes and such. And then the last thing I'd say is the infrastructure to actually move the carbon around once you've captured it. You need to have the use case very close for utilizing it, because there aren't pipelines moving all over the place. You're not going to move it by truck or rail car, because it just ruins the economics. So today you need the utilization to be very close to the plant itself.
I'd imagine carbon offset markets will help incentivize people to participate. How do you see those developing over the coming years?
Yeah, I think we're going to have very robust carbon offset markets, and particularly in the near term on the voluntary side. I mean, you're seeing a dramatic drawdown in the last year of carbon offsets, meaning corporations are buying carbon offsets at a very rapid pace, and they're not being created fast enough. So I think we're going to need more categories of carbon offsets created. That's going to need to happen more quickly if we really think that people want to do the right thing, can't reduce their emissions fast enough, but want to enable new technologies. And I'd like to emphasize that carbon offsets can enable and should be enabling new technologies. An example of that, and then get those technologies off the ground to the point where they're at scale and cost comes down. A great example of that is just the power industry, how offsets or credits were being generated whenever you produced a new, say, wind farm or solar farm. Those were phased out in 2019. So basically it was decided that this is cheap enough now where you can make this at scale where you don't need that offset. So marketplaces, the market itself, you don't need regulation necessarily to incentivize the creation and the scaling of technology. You just need active participants who are very interested in moving technologies forward. And I think we're at that place now.
Great. So are you, somebody wants to ask about your firm. Are you considered angel investors? Do you invest in certain regions such as Texas? And do you take investors into your group or your fund?
Right. And we are a venture capital fund. So I guess you could say, a professional angel investor of sorts. So we invest professionally in private companies, like an angel investor would be investing themselves individually in private companies. So we're behaving on behalf of our investors. We do have investors, and we started our fund back in October. So there is opportunity to invest, though. That's something that is is possible.
Maybe Eric, you would put your email address in the chat after your talk here for that attendee. Another attendee asked, are you interested in regenerative agriculture and carbon products? Utilizing carbon to make products such as biochar, hempcrete, cement. We'd love your take on this.
Yes. I think I guess there's a couple ways to go about this. Yes, taking materials like hemp and making them into usable material is interesting. Taking ag byproducts and making those into usable material is very interesting. And we are looking at companies that are doing those things, and think that there's promise there. What's also interesting is hemp grows quickly. It captures a lot of carbon. It can produce carbon offsets as well. There's soil carbon offsets that exist today that companies can generate, which is going to help the farming industry. And I hope that more people know about that in the future.
So we have a question. What trends do you see in organizational change for the mission of bringing planetary boundaries back into alignment?
Planetary boundaries. What do you think that means? Yeah, I guess if we get a little more.
Maybe it's another question I had, which is, corporations are announcing sustainability goals around carbon neutrality. What do you see in terms of corporations doing things to meet these goals?
Okay. If the question's kind of around, there are certain areas that have regulations and certain areas that don't have regulations, and there isn't any global regulation right now, whether it's on an offset basis, so carbon credit basis, defining what carbon offsets and credits are, or whether it's on carbon tax or anything else. And it's very decentralized, very fragmented right now, and I think it will be for some time. So in terms of creating global alignment, there is some global alignment. The Paris Accords identify that, and corporations are all acting individually. Countries, states, folks are acting individually on setting goals around what that means. You are seeing like SEC guidance starting to come out, for instance, around reporting, which will help bring alignment. Similarly, just a few weeks ago, the UN set in motion a similar sort of path as what happened with the Paris Accords for plastics and for recycling. So just a few years from now, we should have a similar sort of agreement that happened with the Paris Accords for plastics, and that will help move things forward, I think, more quickly for recycling. As was mentioned in a talk earlier, recycling rates are not strong in the US. They're much stronger in Europe and other places. And seeing more alignment around collections would be fantastic. The collections are a huge issue. And if you can collect more, then you can do more upcycling or recycling. And upcycling and recycling is of tremendous value.
So what size investments do you make? You mentioned seed, Series A. What size are your typical investments?
Yeah, so we're investing in 40 to 50 companies as the anticipation in our fund, in our first fund. We're studying it into two separate kind of portfolios within the portfolio. So seed style portfolio of 25 to 30 companies, $250,000 to $750,000 checks initially into companies. And then a core style portfolio with 10 to 15 companies, 1 to 3 million sized initial checks into those companies, and then following on to the winners in both kind of strategies.
Thank you very much, Eric, for sharing